Good weekend. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, the 12th of April, 2024. So we saw a week where we've had CPI, PPI reports. CPI was red hot, saying that the Fed is not for a June cut. Now, I know there are analysts still out there going with it, but I think that they are taking that funny smoking stuff, all right? I don't see what they're doing. And if it comes to June, I probably want to join them and have something to smoke. I'm not seeing what they see because you'd have to have terrible numbers come in month after month, probably three. Why the number three? Three makes a trend. And you've had three hot numbers of CPI. Remember, at first it was a bump because January, February were coming in hotter. But once you get to the third, it's pretty hard as a market technician to say you don't have a trend. You will see Jeremy Siegel, others all talk, you want to see in groups of threes. And that's what I believe took place. So now I'm looking for three down. Okay, so you're telling me that you're going to, in May, get the April number, that's going to be down. And in June, you're going to get one other. You're missing a month there. Okay, for the June meeting. So I don't think that's what's going to happen. I think the market will push it back whenever it is, when it slows down, and labor's got to slow down, and it hasn't. Next, you have geopolitics, all right? And the geopolitics took hold of things today. And today it wasn't a blow-off day. I want to make this clear. But today was a day in the metal markets and in the energies where geopolitics just completely took the market over. And if you bought early in the day, you got your butt kicked. The market went from 24.48 and you're down quite a bit from there at the 23.74 level. Look at the silver market. Silver, 29.90, down almost $2. Yeah, this market went from the highs to the lows. Copper, on the close, off the high, nearly 11 cents lower. Platinum market, $20 off the high. And again, these markets give you settlements at 12:30. They were making much lower lows as the day was going on. So that's how that went. In the stock market, you haven't had a correction of meaning since the October-November period. Those of us that have been waiting for it, number one, we're getting old, we're in rocking chairs, and you've missed a lot of the moves. End of discussion. No question about that. In the futures, a very difficult situation. Now, we're getting the correction. What does it mean? Let's talk about it for a minute. For the month, you've got 2 weeks done this month. You're down 2.66%. So it's what I call a clean month. You got 2 full weeks under your belt here. That's good. And you can see where you're at. When we come on a weekly chart of closes, these are charts of closes, you're down 1.63% this week. And last week you were down, 105 if I'm correct. Yeah, 105. So as I look at it, there's your percentage. Now, when you come to the weekly chart with nothing on it, you're getting a distribution up here. Anything can happen. But in terms of geopolitics, I don't think anything can happen to send this market up. The odds favor that anything geopolitics, no Israel war, no attack in terms of with Iran directly. Why does the market go up on that news? That's bearish, maybe the gold initially off of just geopolitics. And if there's war premium in the other markets, maybe that gives the market a boost because maybe energy's initially slipped. But if there is a war element and an attack happens, that's certainly not bullish this market. That'll get everybody even more nervous. What are we getting ourselves into? Because once Israel's attacked directly, the president has laid his campaign out. Ironclad. The United States stands with Israel. So if we go after if Israel goes after their nuclear reactor facilities as a retaliation, are we backing Israel? Understand what I just said. The whole region then opens up for war if we're doing that. And bingo. Iran understands that, so we'll see how they play it. When you look at the action here, you got a correction finally. You've broken the pattern on a weekly chart of continuous higher lows, higher highs that has been in place. Now, let me remind you, since the October-November period. So a stall is at hand. Is the stall the war? Is the stall the geopolitics, or a combination? I think it's a combination. When you take a look at where market might go, you could go back to the 50,000 level. This market's moving each week about 30 points on the 18-week moving average. It'll get up towards the 50-41 level when we open, because you take this number, you drop 18 days ago, how the averages will work out. And I realize we're dropping a little bit, but that's about where it'll start off. When I take a look at where the market's at in Bollinger Bands, 4 weeks ago, you hit that and you went into a stall. When you look back at it, when it's taking place, it's very hard, because you'll say, no, you got there and you got through it. Okay. But you didn't go anywhere. You closed lower on that week, and now you closed even lower again. So the market has got its stall at hand. Do the retail trade people, do the brokers that manage money, do people come in and say, this is the break I've been wanting to get into, I'm going to be a buyer on it? That is the big question. You and I have heard this on Bloomberg. We've heard it on CNBC over and over and over. Given the first break, you could even get down to a 10% break. That's where you got to step back into the market. Well, that could be at hand. You still have the bullish embedded reading, but when you open Sunday, will it stay embedded? That's going to be the thing you have to look at. If the number's under 79 to start the week off, I think the traders back off until it's back over the 80 level and they're comfortable with that. If it's under there, got to be cautious. I have no idea how it'll reopen. In the Dow, fought its battle right at the upper Bollinger Band. I mean, I have people that will write me on the YouTube channel, oh, look at that band. Well, I do look at the band. And there are markets that can get away from you. There is no system I know that if you're not in it ahead of time and you get a vertical price rise, you come from the lower band and you go up like that. If you can catch it, wonderful for you. More times than not, you're not going to. That's not what most trending systems try to do, by the way. So in this one, you stepped out of your uptrend as well. That happened last week. This is the follow-through to the neutral number. Where could it go if it decides to break more? It could go another 1,000 points. 37,000, wherever that lower band is a possibility. Strength is still seen in the NASDAQ. It too is still embedded. So we still have embedded readings here. If we come back, let me get back to the Dow. The Dow hasn't been embedded. So there's your difference. You have been embedded in the NASDAQ. It's like the S&P doesn't lose it. If it does, in this case, the 18-day average is a possibility. And in the Russell, it's more like the Dow. It had not even embedded, by the way. Just dropping back, look where it went today, right to that average. Where's the bigger support? Long term, the bigger support's 1941 to 1930. The combination of the 200-week and the lower band. In 5-year notes, for me, this was the way I teach charting. And by the way, let me bring something up here before I go any further. I'm going to do it right now instead of later. I did release my new charting course. I talked about it starting in December. I said, I didn't think I'd make it then. It's finally done. And this thing teaches you, I teach you in it, how to work with the markets via videos. There's 45 videos, just about 4.5, 5 hours of videos. And I teach you the different techniques that I use in them. So it's chapters built on swing lines, teach you how to do it. The moving averages, the way I use them. You're not seeing them all here. There's quite a few that you don't see here. Why do I use the ones I use versus there's exponential, there's weighted, there's all different types. Slow stochastics, I tie with Bollinger Bands. So I introduce you to it here, and I get you ready for what we call our enhanced Bollinger Band course. But you got to understand the basics to get there. And something I never show you here, our window envelopes. Folks, I use them every day of the week. That is a major tool. I don't show it here. You'll say, well, it's a deviation from a mean, the mathematical mean of the 18-day average. And it is to a degree, but I tie it with swing lines. And I show you what I'm doing there and why I'm doing it. So you put it all together, you start getting a game. And that's exactly what it's about. Included in the course, and this is how the charts will look, by the way, just so you can see it. And there's more moving averages than this. I don't want to bury you with all the graphics right here because there's quite a bit to be looking at. But you can see that's the Bollinger Band example, how it looks right out of the videos. You get now 30-day trial to my morning subscriber videos, both futures and Spider ETF stock. And if you're not a subscriber to my full research, you get that. In addition, the charting software, if you haven't used our charting software in the past year, that's included with it as well. Because it's brand new, because it's the inaugural, I'm offering a 10% discount for a very limited time. You go to our website, iraepstein.com, or you click up here, and away you go. But if you're looking to learn, I think I can teach you and bring you right into the loop. And the beauty is the course lets you add to it. So you can add your own things and away you go. Plus, I answer questions if you write them to me, and I try to get right back to you. Okay? All right. So let's go back to where we were together. The 5-year note, as you can see, the market coming down, hits the Bollinger Band. It's not embedded. I teach you got to take money off the table. End of discussion. You could bounce here. Am I still bearish? There's nothing bullish on this chart, but that was the spot to be coming out. In the 10-year note, the way I teach it, same spot, trend down, first challenge of it, so long. Dollar index, first challenge up here, yeah. And I know everybody's bullish and the dollar's going to go to the moon. And I've been a guy talking 107. But I would not, when you're not embedded, be telling my clients to buy the upper Bollinger Band. You can buy it. I wouldn't have my clients come in fresh there. And I wouldn't have them be selling right now in the euro, the 100-day average, and the Bollinger Band. I'd have them cover some shorts, get ammunition now, and sell the next rally because the game has been tipped. The euro people, the European Central Bank, their ministers, everybody there, they're dying to get rates cut for their economy to grow. It will take the market data to be super strong to keep Ms. Lagarde from being pressured to make their cuts. So you wait on the rallies, in my opinion. Canadian dollar, same thing. They've got their own problems here. The good news is a lot of oil shipments, they're making money on that, and they're getting their pipelines open, so good for them. Japanese yen, as I told you, I'm waiting now here. This is an embedded reading. It's bearish as can be. It's a matter of when the Japanese government decides to intervene, to kick the market up, let them, if you will, shoot what they're going to shoot in the market, and then I think the pros are going to come in and sell the market again. In other words, I don't think they're going to buy into what the Japanese central bank is doing. I think traders want to be selling the rally still. In Bitcoin, you did not participate with gold this week. You're down 0.86 for the week. Nothing real solid there. Now, you're coming back up to the spread point on a weekly basis. You've been under this spread the whole year, where Brent has been basically weaker than WTI. Obviously, if something happens where the strait is closed, Hormuz, you know how many, I think it's 7 million barrels a day go through there from the Saudis. If that got shut down, imagine what would happen. I'm not saying it's going to, but I'm giving you the what ifs. Then you look at Brent, well, you're at the upper band. You're in an embedded reading. Do the traders take some money off? Yeah, the word some, not all. You didn't lose the embedded reading. You got to learn how to work with that. WTI on a weekly basis is identical. Some money off the table, not the whole position because you didn't lose the embedded reading. Rebob gasoline on a weekly basis, bullish, still $3 target as I see it, even with maybe there's nothing over the weekend that happens between Iran and Israel. Driving season's right ahead of us. And it's going to be a big one, all right? You put it together, you get your game plan. If you're interested in learning the way that I chart, seeing it, sitting there, doing it yourself, learning about it, it's simple. You get a 10% discount for a short while. Move your cursor up here, go to iraepstein.com, right under the word education. I'm Ira. You have a great weekend.